Hi friends, welcome to the channel JIB and CIB Made Simple. So friends, if you are giving the examination for certification course on MSME, that is micro, small and medium enterprise, which is conducted by IIBF, then you are in the right place, because in this particular video we are going to cover the previous year memory based question with explanation. Right, so we have sets of such type of previous year question, and the sets, this is the first set, and you can see we have created a special course on MSME. This is the course which is available on our app JIB and CIB Made Simple. You will see previous year question set 1, you will see unit wise theory and MCQ PDF, in which you can see that I have provided module A, module B, module C for each unit. Like for unit 1, you can see you will get separate theory and MCQ PDF. MCQ PDF will open in such format as you can see here. It's just opening. So this course is available on our app JIB and CIB Made Simple. If you want to purchase it, it will cost only rupees 200. The link is provided in the description section. This will help you avail a good marks in the upcoming certification examination for MSME. So now, without wasting our time, let's see the first question which were asked in the previous year examination. The question was, which of the following is covered under the CLCSS? Right, which of the following is covered under the CLCSS for MSME? So let's see the option that we have. The first option say providing. What is CLCSS? Credit Linked Capital Subsidy Scheme. First of all, you should know the full form, right? So option is providing working capital loan to MSME. So what do you think? See, this sound reasonable, right? But it is not correct for CLCSS. The scheme is focused on what? The scheme is focused on technological upgradation. Right, this CLCSS scheme is focused on technology upgradation, not general working capital loan. Such loan are usually handled by bank under other scheme like CGT MSE. Now option B says offering 15% subsidy on technology upgradation investment up to rupees 1 crore. Yes, this is the correct answer. CLCSS provide a 15% subsidy to MSME for upgrading their technology, making it their production process more efficient and competitive. You imagine a small manufacturing unit upgrading from manual to automated machinery. So a small manufacturing unit which is upgraded from, earlier it was manual system, and now it has been upgraded from manual to automated machinery. Right, so if the investment is rupees 50 lakh, suppose the investment is rupees 50 lakh, so they can get 15% subsidy. 15% subsidy they can obtain, and that is how much? 7.5 lakh saved. 7.5 lakh rupees will be saved. So option B is the correct answer. Now let's see the other option we have. Option C says that again I am repeating this particular concept. This says that I have taken a small manufacturing unit which upgraded from manual to automated machinery, and investment is 50 lakh, so they can get 15% subsidy. I think 15% will not be 7.5 lakh. This will just be 50 lakh. Yes, 7.5 lakh. So they will get 7.5 lakh subsidy, right? So offering us 15% subsidy on technology upgradation investment up to 1 crore. Right, so this is CLCSS. Now option C says granting direct financial aid for MSME expenses. This sound helpful, but it is not a part of CLCSS. This scheme does not provide direct financial aid. It focuses solely on subsidies for technology upgrade. And option D says subsidizing raw material cost for MSME. This is unrelated to the scheme. CLCSS has nothing to do with raw material subsidy. So the right answer is option number B. So the key points which we come to know from this particular question is that CLCSS focus on technology upgradation. First of all, you should know that is focus on technology upgradation, right? And the second point is that it provides 15% subsidy on eligible investment up to rupees 1 crore, and it does not cover working capital loan. What are not covered? Working capital loan are not covered. Then aid, financial aid is not covered, or raw material subsidy are not covered, right? So these three things are not covered under it. Now let's see the next question we have. Let's MCQs. Question number 2, as you can see on composite loan. So the question you can see, which of the following statement regarding composite loan for MSME is not correct? Right, so this is the question. So remember, we are looking for incorrect statement here, right? So let's see the first option. A composite loan of up to rupees 1 crore can be sanctioned by bank under a single window. This is absolutely correct, because composite loan allow MSME to get funding for both working capital and fixed capital, right? Like buying, suppose you are buying machinery, that is fixed capital. So composite loan allow MSME to get funding for both working capital as well as fixed capital under a single application to avoid unnecessary paperwork. So let me give you an example. Suppose an MSME apply for 50 lakh. Suppose an MSME apply for 50 lakh rupees to buy machinery, right? And rupees 10 lakh for daily operational expense, for daily operational expense. So they get both under one loan, right? So a composite loan up to 1 crore can be sanctioned by bank under a single window for working capital loan as well as a fixed capital loan, right? Suppose MSME apply for 50 lakh to buy machinery and 10 lakh to cover daily operational expense, so they get both under one loan. Now option B says that bank sanctioning a term loan must also sanction a working capital limit to avoid delays in production. Yes, this is also correct, because this ensures that when business invest in long term asset like machinery, they don't face cash flow problem, and they don't face cash flow problem for daily operation like paying for electricity or labor. Option C says that composite loan are provided only for purchasing raw material, not for machinery. This is incorrect statement, and hence the correct answer to our MCQs, because these composite loan are not restricted to just raw material. They cover working capital loan also like raw material, and fixed capital loan also like machinery. For example, imagine an MSME buying advanced packaging equipment while also needing fund to buy packing material. So composite loan can cover both. And option D says that, let's see the option number D, just wait a minute. Yeah, the RBI master direction dated July 24, 2017 governs the sanctioning of the composite loan. So see, this is correct, because RBI guidelines are crucial in regulating composite loan and ensuring MSME get the support they needed. So the correct answer to this particular question is option number C, right? That composite loan are provided only for purchasing raw material, not for machinery. This is incorrect, because this is the right choice of this question. So you should know that this composite loan cover both the fixed and working capital. Fixed capital also cover, working capital also cover, and they are sanctioned under a single window. You should know this, they are sanctioned under a single window. And term loan and working capital loan limits are combined to avoid production delay, and RBI master direction dated to July 24 governs composite loan. I hope this breakdown cleared up your doubt about the composite loan. If you really find it helpful, don't forget to like, share and subscribe for more simple and clear explanation. Now let's see the next question. The next question is regarding when a shareholder, who can be a shareholder in a public limited company, right? PLC means public limited company. Who can be shareholder? So friends, let's see the first option. Only the company executive can be the shareholder. This is incorrect, because public limited company are open to anyone who meets the investment requirement. Limiting shareholder to just company executive is not how it works. So for example, if only the CEO, CFO and a few executive could buy share, it would not be called a public company, right? Now the next option says only individual investor. See, this is also incorrect, because individual investor can buy share. Public company welcome a wider pool of investor. It welcome a wider pool of investor. Now option C says that only business partner and financial institution. Again, this is incorrect. Why? Because business partner and financial institution can invest, but they are not the only one who can. And option D says individual, business partner and financial institution. This is the correct answer. That a public limited company can issue share to a variety of stakeholder, including individual like you and me, business partner and financial institution like bank. Think of a company like a Reliance Industry. Its shares are bought by individual investor, mutual fund and other business like. So the correct answer is option number D, right? So let's summarize the key point. The key point here is that public limited company are open to multiple type of investor. Shareholders can include individual, business partner and financial institution, and they are not limited to executive or special investor category. I hope this explanation make the concept easy to understand. Now let's see the next question, that is our question number 4 from the previous year asked question. Now this is based on hand holding stage for rehabilitation of MSE. So the question is, which of the following is not a criteria for a MSE account to reach the hand holding stage in the rehabilitation process? Very nice question. So let's answer this particular question. So friends, option A says that the delay in commencement of commercial production by more than 6 months due to reason beyond the promoter's control. So what do you think? This is correct, because if an MSME can't start its operation within 6 months, so suppose there is an MSE, it can't start its operation within the 6 months, right, due to uncontrollable factor like government delay or natural disaster, the account may need support through rehabilitation. Account has to be supported through what? Through rehabilitation, right? So for example, imagine an MSE factory delayed by heavy flood. So suppose heavy flood came and it delayed MSE factory. So this would qualify for hand holding support, right? This will automatically qualify for hand holding support. Now option B says that company incur losses for 2 years or cash loss for 1 year beyond the accepted time frame. This is another valid reason, because persistent loss indicate that business is struggling and may require intervention, right? So business is struggling and it may require intervention because the company is struggling, right? So for example, if a small manufacturing unit continues to operate at a loss for 2 consecutive years, so it becomes clear candidate for handholding, right? So this is also correct. So question is which is not correct, right? You should remember option C says that sales exceeding 75% of the projected level in terms of the value during a year. This is incorrect statement and hence the correct answer. If the sales are, suppose if the sales exceed 75% of projection, so sales exceed 75% of projection, it shows the business is performing fairly well and does not require rehabilitation. Obviously sales is larger than the 75% of the projection, so business is performing well. So why there is a need of rehabilitation? In fact, such business are considered as stable and successful. And option D says that capital utilization is less than 50% of the projected level in terms of quantity. This is the valid reason for handholding, because the capital utilization is low. This is called low capital utilization. This is called low capital utilization. So the low capital utilization signals inefficiency of a poor market demand. If a business that projected 1000 unit per month is only producing 400 unit, it may need handholding support, isn't it? So if the capital utilization is less than 50% of the projected level, suppose the business projected that projected 1000 unit per month. Business projected 1000 unit per month, but it is only producing 400 unit. So what would that be? It will need handholding support, right? So the correct answer is option number C, right? So let's summarize the key point just now. So handholding support is provided when business face delays, losses or underperformance issue, right? Then handholding support is provided, and key triggers include delayed production, persistence loss or low capital utilization. Sales exceed 75% of the projection means the business is stable and does not need rehabilitation. I hope this makes your concept clearer. Now let's see the next question. The next question is based on CERSAI. Under which act is the CERSAI licensed? Very good question. So let's go through the option. The first option says BRA. This is incorrect, because Banking Regulation Act governs how banks operate in India, including rules related to their management, right? So this is incorrect. Option B says Companies Act 2013. Exactly, this is the correct answer. That CERSAI registered as a company under the Companies Act 2013, and this act governed the formation, regulation, dissolution of a company in India. I am giving example, just like Tata, just like Infosys, right, are registered as company under the act. CERSAI follow the same legal structure. And the last option C says SARFAESI, that is securitization and reconstruction of financial asset and enforcement of security interest. So this is a tricky option, because SARFAESI Act clearly defines the purpose of CERSAI, which is to record charge on secured loan. However, it does not license CERSAI. So suppose if a bank want to secure a loan against property, the details are registered with CERSAI under the SARFAESI provision, but SARFAESI only provide the legal framework, not the licensing. And option D is RBI Act. This is absolutely incorrect, because RBI Act is mainly concerned with the regulation of monetary policy and the functioning of central bank in India. That is why option number B is the correct. So what is the key takeaway from this particular question? The thing is that CERSAI is a central registry that record information on secured loan to prevent fraud, and it is licensed under Companies Act 2013. SARFAESI provides its legal purpose but does not handle its licensing, and Banking Regulation and RBI Act are unrelated to its licensing, right? So the question was regarding the licensing of that. Okay, I hope you are understanding each and everything. Don't forget to hit the like button, right? If you really think that this effort is useful, I will bring more and more MCQ session on like this. Please proper explanation of each and every question, which will provide you conceptual clarity, and if you get such question in examination, you will confidently answer it. Now let's see the next question. The question is regarding the legal status of a business entity. Very good question it is. Let's see which of the following statement is not correct regarding the legal status of proprietorship and partnership firm. So basically it is regarding the legal status of the sole proprietorship and partnership firm in India. Let's see the option. Option A says a sole proprietorship is not recognized as a separate legal entity from its owner. So what it is saying? It is saying that in a sole proprietorship, the owner and business are the same legal entity. What do you think? Is it clear? Is it so that in a sole proprietorship the owner and business are the same legal entity? There is no legal distinction between the owner personal finance and the business finance. Obviously, for example, if a shopkeeper takes out a loan for his business and can't repay it, his personal asset can be used to settle the debt. So that is why in a sole proprietorship is not recognized as a separate legal entity from its owner. Exactly, this is correct. Now option B says that a partnership firm is recognized as a separate legal entity from its partner. This is incorrect, and this is the correct answer to this question, because in India a partnership firm is not a separate legal entity from its partner. The partner are personally liable for the debt and obligation of the firm. For example, if a partnership firm default on a payment, creditor can go after the personal asset of the partner. Now let's see the option C. Just wait a minute. I hope it is clear. Now option C, they say that in the sole proprietorship the owner has unlimited liability for the business debt. Unlimited liability. So unlimited liability means if the business incur debt, the owner is personally responsible for paying them off, even if it means selling a personal property. Exactly. Suppose a sole proprietor run a bakery and he faces the loss. He may have to sell his car or house to settle the debt. And option D says that in a partnership firm, the partners share liability for the firm obligation. Yes, this is correct, because partners share both the profit and liability of the business. They share both. They share profit also, and they share the liabilities also. So if one partner default, the other partner can also be held liable for the firm obligation. So in a partnership of 3 people, if one partner disappear, the remaining 2 are still responsible for settling debt. So the correct answer to this particular question is option number B. Let me show you again option number B what it says. Option B says that a partnership firm is recognized separate legal entity from its partner. No, this is wrong. So you should know that sole proprietorship and partnership firm are not separate legal entity. In both firm, owner or partner have unlimited liability for debt, and the incorrect statement is that a partnership firm is a separate legal entity. It is not, and partners share profit and liability equally unless otherwise agreed upon. Now let's see the next question. Under the SARFAESI Act, what is the minimum notice period that a secured creditor must provide to a defaulting borrower before taking the possession of the secured asset? Very good question it is, right? So we will break down each and every option, explaining in simple terms. So let's see the option: 30 days, 45 days, 60 days, and 90 days. So option 30 days is incorrect, right? 45 days is also incorrect. But the correct answer is 60 days. Let me tell you about the section number. About the section 13 subsection 2 of the SARFAESI Act. You should know about it. This section of the SARFAESI Act, it says that the secured creditor must issue a demand notice giving the borrower. So here the keyword, issue notice and demand notice, right? Giving the borrower 60 days to repay the outstanding loan. What happens next? If the borrower does not repay or respond, the creditor can proceed to take possession of the security or secured asset under the section 13 subsection 4. So possession is listed under section 13 subsection 4, right? So here correct answer will be 60 days, right? So suppose a borrower default on a home loan, the bank send a notice, right? The bank send a notice demanding repayment within 60 days. If the borrower does not repay, the bank can take control of the property. Option D says 90 days. This is incorrect, because 90 days is longer than the required notice period under SARFAESI. So the correct answer is option number C, that is the 60 days. You should remember this concept, very very important examination point of view. Now let's see the next question, that which of the following statement is not true regarding the difference between LLP and a private company in India. LLP is called limited liability partnership, and private company you are well familiar with. So option A says that LLP is governed by the Limited Liability Partnership Act, while the private company is governed by the Companies Act. What do you think? This is the correct. And you must keep in mind that not correct has been asked. This is correct. Why it is correct? Because LLP in India are regulated by the LLP Act 2008, while the private company are follow the provision of the Companies Act 2013. Now option B, let's go to the option B. Just wait a minute, I'm coming to option number B. Yes, option number B is here. A private limited company must have its account audited annually, while the LLP exempted from audit regardless of its turnover. This is incorrect, right? This is incorrect. You should know that a private limited company must indeed get its account audited every year, right? Private limited company, or we can say PLC, must get its account audited every year, right? It should get account audited every year, right? So a private limited company must get its account audited every year, but saying LLP are completely exempted from audit is wrong. LLP are required to get their account audited. So see, LLP will get their account audited if the turnover exceed 40 lakh. So the condition for LLP to get account audited is that turnover should exceed 14 lakh or their capital contribution exceed 25 lakh. Capital contribution should exceed 25 lakh. For example, imagine an LLP making 50 lakh in turnover. Suppose an LLP is making 50 lakh in turnover, so it must get his account audited even though it is not a company. So the statement claiming LLP are fully exempted is incorrect. You can see what is it claiming. The statement is claiming that LLP is fully exempted from audit. No. How it is possible? They are not fully exempted. Option C says that a private limited company can raise equity capital from investor, where LLP cannot issue share to raise equity funding. See, private limited company can issue share to raise fund from investor, right? They can issue share. They can issue share for what? They can issue share to raise fund. To raise fund from where? Investor. So they can issue share to raise fund from investor. On the other hand, LLP can't issue share. LLP cannot issue shares. Funding comes through partner contribution only, right? And so this is also what is say LLP cannot do. Yes, this is also correct. An LLP partner have the flexibility to manage the business directly, while in private limited company, director manage the private company on the behalf of shareholder. What do you think? Is it correct? Option D. In LLP, the partner manage their day-to-day operation directly. In the private limited company, director handle management on the behalf of the shareholder. So the correct answer is option number B, right? So you should know that private limited company must have account audited annually, while in case of LLP, this is wrong. So let's summarize the fact. They are covered by the different act. We know it about it. The LLP needs audit if turnover exceed 40 lakh or capital exceed 25 lakh. Private limited company must get audited annually. Always. Private limited company can't issue share. Private limited company can issue share, but LLP can't issue share. And LLP partner manage directly. Company have directors. I hope this makes the concept clear. Now let's jump over to the next question, and which is a very nice question, right? It is based on which of the following is not one of the 5 C's of credit used by lenders to assess a borrowed credit worthiness. Not a 5. See the here the word, not 5, right? So the first option say character. Character is one of the borrower, right? Character is one of the 5 C's of the credit. There is something called 5 C's, right? Character refers to the borrower trustworthiness and willingness to repay the loan. For example, lender assess your repayment history through your credit score and previous loan record to evaluate your character. The option B says capacity. Capacity is about your ability to repay the loan based on your income and financial obligation. The bank will check your income, expense and debt to income ratio before giving you loan. Then the third option we have is capital. This is another important C, right? So capital refers to the borrower own money invested in the business or asset. If you are taking a business loan, the bank will check how much of your own money you have already invested. Option D say collateral. This is definitely one of the 5 C. Collateral is an asset that the borrower plays as security for the loan. And what is option E? Let's see the option E. Option E I think is compliance. Yes, compliance is not there, right? Because what are the 5 C's? Let me remind you what are the 5 C's. The first C is character, capacity, capital, collateral, and last is condition like economic factor. There are some condition like economic factor. So the compliance, which refers to following legal or regulatory requirement, is not a factor in credit assessment. So 5 C's are character means trustworthiness, capacity means ability to repay the loan, capital means borrower's own investment, collateral means security for the loan, and condition means market or economic condition. Compliance is not one of the 5 C's. So these 5 C plays a crucial role for credit used by lender to assess a borrower creditworthiness. Now let's see the next question. Which of the following statement is not true regarding the common seal of a company? Very nice question. Common seal, first of all, let's see the options that we have. Option A says that the common seal is a mandatory requirement for all company under the Companies Act 2013. This is incorrect. This statement is not true, because that before 2015, common seal was mandatory. It was mandatory before 2015. But that Companies Amendment Act 2015 made the common seal optional for the company. Now it is optional. For example, some company may choose to have a common seal for executing official document, but it is no longer compulsion. Option B says that Article of Association may specify the condition under which a common seal could be affixed and a person authorized to do so. AOA is called Article of Association, is a document that outlines the internal rules and regulation of a company. It specifies when and how common seal should be used and who is the authorized to affix it. So this is point number B. Point number C says that MOA, it's called Memorandum of Association. MOA is called Memorandum of Association. So MOA does not typically provide provision about the common seal. So this statement is true. MOA outline the company main objective, power and scope of the operation. It does not usually contain provision about the use of the common seal. So MOA would focus on what the company is set up to do, like selling goods or providing service, but it would not mention how to use their company. And option D says the common seal is used to execute document on the behalf of the company. So this statement is true because common seal is traditionally used to execute document and so that company official agree with the terms of the document. It serves as a company's signature on legal contract and other important paper. So the correct answer is option number A. So let me again summarize the fact which we have learned just now, that common seal is optional for company, right? Under the Companies Amendment Act 2015, the AOA can specify how and when the seal should be used. The MOE does not mention the common seal, and the common seal is used to execute legal document on the behalf of the company. I hope this make your concept clear, right? Now let's see one more question. So one more question is regarding the BEIS, which is the back end interest subsidy scheme for MSME in Tamil Nadu, for MSE in Tamil Nadu. Which statement is not correct? Which is incorrect? Basically the question is which is incorrect, right? So let's see. Let's see the correct options. First of all, first option says that the BEIS provide a 5% interest subsidy on term loan for a period of 5 years. What do you think? Yes, this is true because this BEIS, or we can call it back end interest subsidy scheme. So this BEIS scheme offer a 5% interest subsidy on term loan, which means business will only need to pay 5% less interest on a loan for a period of 5 years. This help ease the financial burden on a small business by reducing their loan repayment amount. Let me give you an example. Let's say a small business takes a loan of 10 lakh. Right, 10 lakh a business loan is taken by a small business. So if they qualify for the subsidy, they will only pay 5% less in interest for the next 5 years. So again I am repeating that BEIS scheme offer 5% interest subsidy on term loan, which means business will only need to pay 5% less interest on loan for a period of 5 years. Right, let's see the option number B. So which statement is not true it is asked, right? Option A1 is correct. Now option B, let's see. Option B says that a maximum subsidy amount is 20 lakh for loan up to 2 crore and obtained under the CGT MSE. So CGT MSE. So the maximum subsidy, yes, this is also correct. The maximum subsidy under BEIS scheme is 20 lakh, which is applicable to loan that are up to 2 crore, and the loan must also be obtained through the CGT MSE, right? CGT MSE design. For example, suppose if a business take a loan of 1 crore under the CGT MSE, they could get 5 lakh subsidy, 5%, right? For larger loan, they could get up to 20 lakh as a maximum subsidy. Now the next option is that BEIS is exclusively available for new micro and small manufacturing enterprise. So this is also true. This BEIS scheme is only available for the new micro and small enterprise, and it specifically target the manufacturing business. This means that only manufacturing business which are starting or are new can apply for this subsidy. Option D is incorrect because this is the correct answer here, because BEIS is applicable to all micro and small enterprise service-based business. This is wrong. Because BEIS is not applicable to service-based business. Here it is written service-based business, and you should know that BEIS does not apply to the service-based business. It is specifically meant for new manufacturing enterprise, right? So friends, that is all for today's session. We have some more MCQs, as you can see, which were asked in the previous year question. This is a set 1. If you want to get videos for all the MCQ, you have to enroll in our course. The course link is provided in the description section. I will provide you videos explaining each and every MCQs, and such type of MCQs are available in our unit wise MCQ PDF. For more detail, you can WhatsApp me on this particular number if you want to enroll in MSME certification course. And you can see the course detail here also. This is our course. Just I'm showing you. So you can see this is the course which we are talking about. So in this particular course, you can see you will get each and everything, like unit wise theory, unit wise MCQs, and everything, right? So that's all for today. You can see the certificate course on MSME theory PDF, MCQs PDF separate folder are there. So that's all for today. Hopefully you enjoy our today's session. If you want me to bring such more such MCQ session based on previous year, please write yes in the comment section. I will come to know that yes, you need this. Thank you.